Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In the last few MTPredictor videos we've been looking at our W3 or Wave 3 trade setup, and I've been discussing some good setups in those particular videos. But in this particular video I would like to show the other side of the coin and show you that losses can and do unfold, and as I've said before, this is an important part of trading. So let's first read our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. And remind you there's a risk of loss in trading and investing. That's what we'll be looking at in today's video. So this is an important point that all professional traders must know and understand, but more importantly accept that losses can and will and do unfold. So I want to look at the USE minis today and look at the ES and see how that unfolded yesterday, which was the 3rd of January. As we can see from the video here, this is a 3-minute chart, and for you guys who've been following us for a while will know that we don't just trade all MTPredictor setups blindly. This is because markets go in cycles, and basically just over half the time, or 50% of the time, markets are basically random. So in other words, you can't really do any discernible kind of analysis. So what we look to do is go to our higher time frame chart. So for a 3-minute chart, this will be going out to a 15-minute chart. If you'll say on an hourly forex, you'd go out to the 4-hourly chart, or if you're daily stocks, for example, you go out to the weekly. A time frame between 3 and 5 time frames higher. I'll just take this off. So what we do is we go to previous swing pivot highs or lows and place our DPs on the chart. So I'll just go to just before or early in the day yesterday, and you can see there was a previous pivot low here. So we right mouse click, do a decision point. Can you see how that gave an area of potential support out there early before the market got there? So it was there in advance. If I turn training mode off, you can see how the market came down into this area here, made a reversal and started to rally up. If I now go down onto our 3-minute chart, you can see here it is coming in with our support. The market started to rally up, our MTP trend turned blue, therefore the larger degree trend appeared to be up. As such, you'll be avoiding this TS2 sell, but you'll be looking for buy setups. Later in the day, there were a couple of good setups that unfolded, particularly this one here. Can you see this one? So if I go back and have a look at it at the time, it's always important to see what these would have looked at like at the time. That looked like it was a good setup, where we're coming off high time frame support. The initial rally up will be considered a wave 1. We had an ABC correction down here into a potential wave 2. So if we place the analysis on here, you can see that this was a good looking wave 3 trade setup, where we're looking to get at the end of the wave 2 to potentially trade the wave 3. And as you can see, the potential profit at approximately 9.5 times the initial risk looked to be a good trade at the time. If I turn training mode off, you can see the market actually went sideways for a bit, went up, made a TS4 sell, and then came down and would have stopped you out. So in other words, this trade did not unfold as anticipated. And that's the whole point of this video, is that to show you that no matter how good a trade setup is, there will be times when they do not unfold as anticipated. Now this one here, you may well have brought your stop to break even when this TS4 sell came in. So let's take training mode again. So if we look at it at the time like that, you may well have said, well, I don't like the idea of this TS4 sell, particularly when other markets like the YM was red, and you can see the YM actually had a nice trade actually at this high here, which is in the direction of the large degree trend down, and actually would have been a nice trade. But there was also a TS3 sell there at the time as well. So if you're long here off this W3 trade setup, you may well have brought your stop to break even at that particular point in time. So I just moved those risk reward lines. So you may well have actually come out with a break even trade. If you hadn't, then you would have been stopped out for a -1R loss. There was also another trade set up a bit earlier. Can you see there's a history triangle here? So if I right mouse click over that blue buy bar to analysis, you can also see there was a W3 wave 3 trade set up there, and that would have been just taken in and stopped out immediately. So that would have definitely been a -1R loss. A bit later in the day, the MTP trend turned grey. and you would have had a either VS buy. Now that wouldn't have been a great one because it wasn't basically reversing in around a major low. You can see here's our major pivot low there. So you may well have considered this TS1 sell because the market was still on the way down. It hadn't reached the higher time frame support zone. If I go out to the 15-minute chart, so the higher time frame support zone would now be down here. You can see off that new pivot low. So if I come back to the 3-minute chart, we hadn't reached this higher time frame support zone, so you may well have considered this TS1 sell here. If you had have done, that would have been a nice 3-hour profit. So that would have more than made up for some losing trades earlier in the day. But that's not the point of the video today. The point of the video today is to show you that no matter how good trade setups look at the time, and it's important to understand at the time, that sometimes markets will just not go as anticipated. And that's why we use position sizing to have stops in the market. So when the markets do not unfold as anticipated, the losses are kept small at just one risk unit or 1R. So this is the idea of these W3 trade setups, and as you've seen over the last few videos we've done, basically when the trades come through and the profits are good, the profits are large, but not just large in dollars, but large in risk reward units. So large profits, but when the losses come through, as we've shown in today's videos, the losses are kept small. They're kept small at just one risk unit. So that's what the purpose of today's video is, to show that losses can and will and do unfold, but the trick is keeping those losses small when they do unfold.